Welcome back, financial investors. My name is Brent, and today we are going to be doing our weekly recap for August 26th through the 30th, 2019, the very last week in August. We are about to roll now into September, so it's pretty exciting. We had our very first green week here in August. Now, we're going to start off this video by looking at last week's changes for the week, which are currently up on the screen. We are then going to jump into the four main indexes, see the performance here for the week, look at stock futures, jump into the S&P 500 as a whole, took a look at what sectors were strong this week. Overall, the market was pretty high overall, so many of the sectors were strong. I know financials finally performed here with the markets. We'll be looking at the XLF, which tracks the financials. Then we're going to look at semiconductors, home builders, oil, the dollar, silver, gold, and wrap it up looking at mortgage rates. So if you are brand new to the channel, have not yet subscribed, I would highly appreciate it if you do hit that red button below. It is the little subscribe button below this video. Hit the thumbs up if you enjoy these videos, and of course if you have any comments or questions or would like to leave anything that you were watching this week that took place, let me know in the comment section. I do read and reply to all your comments, and let's go ahead and get into the video. So last week's changes are up on the screen. August 19th to the 23rd, we were coming out of a red week, going into another red week. The S&P down 1.44, the Dow Jones down 0.99, the Nasdaq down 1.83, and my portfolio down 0.68%. So I've been trying to slow the performance up and down of my portfolio, making a little bit less to the upside and less to the downside. So I've been trying to re-risk my portfolio in these current conditions. They'll still generate income, but they won't have as high highs and they won't have as high lows. So that is what I've been kind of doing with my portfolio over these last few weeks. So I kind of posted everything over on my Instagram. If you guys aren't following me there, we'll check it out here after the main stuff that I want to cover here for the week. Now the S&P this week up a whopping 2.79%. Now over the past month here, now we are at the very end of the month. So if we look at the 1 month performance, we are down for the month here a little under or a little over 1%. Here we still have a portion of July here within this graph. So this is showing the 1 month performance, and I believe it's a 31 day, and it just includes that extra day there in July. So we're actually down about 1.25, I believe. This is showing down 1.81. Still year to date, S&P bounced higher, finally. We've been kind of going up and down this past month. You can see here from the highs where we started, and actually felt like we were losing quite a bit more, but this last week with that quick bounce in the last 5 days up 2.79, we made up for half the loss that we've taken this month alone. The Dow Jones performing the best, I believe, of the four main indexes. So the Dow Jones up a whopping 3.02. This is still in third place, up 13.19%. The Nasdaq here is in third place, up 2.79%. The Nasdaq is still in first place for the year to date, up 20.01. And we have our Russell 2000. This one has not been performing really well over the last several months. If you look at the 3 month here, looking back, this one kind of topped off around July period, trended sideways, and then just fell really hard here starting in October in August, and has been downtrending since. So these last few days, it's nice to see that the Russell has had some performance. So I believe this week, I know I posted over on Instagram, trade tensions are kind of off with China discussing that they've been communicating with the U.S. And that's primarily what kind of happened this week. Last week and the following weeks, we had a lot of tension going on out there between the U.S. and China. But this week we saw articles not only on the U.S. end, but also on the China end, that there's been some sort of communication being done between them, and they want to continue to work out. So I don't know if the tariffs will be implemented here. President Trump did come out, I believe, here recently and said that yes, in September 1st, tariffs will still be going out against China, but we'll kind of see how this kind of plays out in the future. I don't think China hasn't retaliated yet with these increased tariffs kind of going on, and that still may be in the works here in the future. So the S&P up 2.79, Dow Jones is the winner, up 3.02, the Nasdaq up 2.71, and the Russell up 2.42. So basically everything is up over 2.4% or higher. Now stock futures here, as I kind of refresh this, they're currently negative, but this can always change. We are on a 3-day weekend here in the States. We have Saturday, Sunday, and Monday. So this can change with any news that takes place here. We can see the market could change here in the after hours. Now, Friday, even though it was a bit of a positive day on the day here, we can see it was kind of flat, but still positive, up 0.06. We had a bit of a mix out there, and that's just because going into the weekend, we don't know what to expect. So I think a lot of traders were taking risk off the table. They had a very good week. They tried to maybe adjust their risk going into this long weekend, which anything can happen. Some news could come out where China is going to be retaliating and putting in some higher tariffs or doing something out there, and that could cause the markets to open pretty low here on Tuesday. So I think a lot of the traders out there actually took a bit of risk off the table, but financials are playing along with the market, and we really need the financials to move this market higher than it currently is lately. If we look at the REIT sector, if we look at utilities, if we look at consumer goods, those three sectors have been performing the best year to date. They've really kind of been pushing the market higher. If we look at the year to date, just really quickly here, you'll see the bright green here in consumer goods. Apple up 32, Procter & Gamble, this was a hated stock back in 2018. It is now up over 30% year to date. Nike up 14%, Coca-Cola and Pepsi, look at the performance there from those two consumer goods. Look at the bright green over in utilities. So there's just a lot of green. Now, some of the sectors that haven't been performing well this week, we can see healthcare. Healthcare has been slammed. Abbey down nearly 30%. Johnson & Johnson actually negative for the year. Pfizer down 18.56%. And also independent contracted oil, such, I know my Exxon and Chevron, a lot of those companies here that investors like to invest in because they're dividend aristocrats and such, have not been performing as well as the rest of the market, and also oil and gas over here. So healthcare and oils, materials haven't been performing as well as the rest of the market, and there could be also Kraft Heinz. I didn't see that one was down nearly 40% year to date. So that one's been walloped along with Altria. I know Altria and Philip Morris, they're going to be discussing a merger. I don't know if it was this week or maybe the past week. I know there was a lot of news floated out there with that. I think it was this week. So Walgreens down 25.08. Now, looking at the 1 week performance, we can see why the market was higher. Every single sector out there was essentially more green than red. Look at those financials. JP Morgan up 3.62, Bank of America 3.93, Wells Fargo, which doesn't usually perform as well as the other financials, up nearly 5% this week. So that is what's really helping support this market. If we can get the financials to help us out, if we can get healthcare to begin kind of coming back from these lows that they've been at this past year, and we stop relying on consumer goods, on the real estate investment trust and the utilities to kind of push up this market, we may see the market move even higher than it currently has. We may break to new records here, and if the Fed continues to play with the market and the states, and with the president, and they cut rates here at the very end of September, as many investors are expecting, we could see the market continue to break even higher into some new highs. So kind of interesting area that we're in. Any sort of tweets, news articles, media, the yield inversion, that could break a lot of. We're in a big old green phase right now. News plays a big factor right now, where earnings and revenue, they sort of get tossed sometimes out the window and they don't matter as much. But other times, I know, what was the one company that took a 30% plunge this week after Ultra Beauty. Ultra Beauty fell $100 on Friday, 30% of its equity price just falling off a cliff. So financials this week, again, doing really well, playing with the market. If we can continue to see these financials do well, we could see the market continue to trend either sideways or slowly gaining some over the next few weeks. Up 3.14 for the week. Semiconductors up 2.29. We have the home builders up 2.71. Lowe's and Home Depot have been doing a blast lately, up 2.71. But Lowe's and Home Depot, if we just check those out individually, I know they've been performing really well. Home Depot up 4.8 in the last 5 days, and Lowe's up 5.46. And those are two big contenders here within this fund, making up nearly almost 10% of this home builders fund. Now, energy this week did really well. Every sector out there did fairly well. If we see oil making a comeback, this could also help. Financials are playing along. Maybe some of the healthcare plays along. Oil plays along. So the main news here, everything was fairly positive till the very end of the week. And that is just because we have the hurricane coming in towards Florida. So right now, that's kind of a loom out there, but Friday down 2.75%. But look at all this. Tuesday up 2.15, Wednesday 1.93, Thursday up 1.2%. Yes, it pulled back almost 3% there on Friday, but still 5-day change up 2.41%. Very nice there with oil. Dollar also moving higher this week, which, as the market moves higher, I have not been expecting the dollar to move higher, but you can see here the dollar broke above 99 right there, 99.02, one of the highest points I've seen it year to date. So very interesting to see a stronger dollar. I know the president out there has been wanting a weaker dollar with these rate cuts and quantitative easing. I know they're using another term now here in the future, but that is supposed to be bringing the dollar back a bit, but this dollar is getting stronger and stronger. And bonds, it's not bonds, silver. Silver is the strong material this week. I've been discussing that silver and gold, in my opinion, feel very extended, and I don't know whether the stock market will pull back, the bond market will pull back, or material with silver and gold will pull back. But silver up this week nearly 5%, up 4.89%. Now gold didn't perform as well as silver here. It did have a bit of a pullback, down 0.29%. We shall see how this one kind of plays out into the future. I know gold miners and gold just overall down this week. Bonds continue to move higher, just slowly at 0.25%. And mortgage rates are down again. I know last week they went up, I believe, 4 basis points, but this week they are back now 6 basis points, moving from 3.85 1 week ago to now 3.79%. So interesting time if you guys are going out there and getting refinances. This could be a really good opportunity again. Just checking it out. Now, end of the week, I think last week, I only had a couple stocks that were positive. I do own a couple only growth companies over on an M1 Finance account. I bought one stock last week here on Monday. I came out, was looking through my entire portfolio, and on Friday last week, one of my stocks that I purchased here on Monday, Stanley Black & Decker, had actually lost 5.47% on Friday, giving me a really nice buying opportunity on Monday. For what it lost in a single day, it actually put that stock into the negative. And I don't know about the performance of Stanley Black & Decker. Let's go ahead and bring it up for the week. I believe it did trend lower this week. Oh no, positive this week. So I bought it on Monday, Stanley Black & Decker. I put all the equity into it, I believe. And over the course of the week, went up 1.34% there. So good buy there. Great long-term dividend aristocrat. And let's kind of continue on. Marcus decreased their rates from 2.25 earlier to now 2.15, and now they are moving from 2.15 to now 2%. So Marcus out there is not a company that I would recommend using for your high yield savings account. I currently use SoFi. It's a 2% high yield checking and savings account. I have a debit card. I have a whole video out there on using this, on setting it up, on how I use it for my YouTube business, because I keep my YouTube business fund separate from my personal fund. So I use SoFi in order to buy stuff with that account, but also have that 2% rate. Plus they have a bonus of $50 when you sign up, put $100 in. So it's a quick 50%, gain right there. And also, I mainly use Wealthfront, the 2.32% high yield cash account for my main savings. So any equity that I'm not invested in the market, I sweep it into my Wealthfront account every month after I pay my credit card. Any cash that I have left over, set it in my checking personal account. I will sweep it into my Wealthfront account, and then it'll just accrue interest in that month. And then as I'm building up my equity again within my checking account, I will put everything on my credit card, pay off my credit card, sweep everything into the Wealthfront account at the very end of the month. That's sort of what I do here with my Wealthfront. So every month, any cash that I am not investing, I sweep it into Wealthfront. So again, the markets are closed here on Monday, so I actually forgot to do my buy on Friday. That was something I was going to plan on doing. I know I wanted to buy Avery Dennison, I believe, but it goes ex-dividend on Tuesday. And now looking at my comments here, I forgot to add equity on Friday and make my buy there on Friday for the ex-dividend going on Tuesday. So I have to look and take a look at what other positions are down in the portfolio that I will be buying up this week. I posted a gold miner company. This is one I've been kind of watching lately. It's not something I've added into my portfolio. RGLD. Let's go quickly look. RGLD. I want to look at the performance here of this one. Gold overall pulled back this week, so okay, I was expecting a bit of a pullback with the other gold. This company here has been doing really well lately, up 3.12% on the week. Now, looking at this one, year to date, obviously high year to date, 55.73, and this all just started just about a few months ago here. Huge run up. This one is also a dividend company. I don't know if it's a dividend aristocrat, but it has grown and been paying out dividends for some amount of time. I don't know it off the top of my head. RGLD. I'm going to go quickly look it up here really quickly on my screen while I continue on here. Now, let's see, Ultra Beauty. I did post about that. Okay, so RGLD, the Royal Gold Company, which is a gold miner, has been growing and paying out dividends for the past 14 years since 2005, has a payout ratio of 54.6%. So it was one of the strongest dividend. It's a dividend, no, what's it called? Contender. 10 years of growing and paying out dividends. Has a low yield of 0.79, but you're getting a nice sort of hedge for the market with that gold position. And then this week we have the overall summary of all the indexes in my portfolio. So the S&P up 2.79, Dow Jones up 3.02, the Nasdaq up 2.72, and my portfolio up this week 1.41% overall. So I've slowed my downside, I've slowed my upside here currently, so it's still doing well. I still count that as a win. Any green is a good green. So that is basically all I wanted to cover in today's video. If you guys haven't been following me over on Instagram, I would appreciate if you guys jump over to the Instagram account. There's a link down in the description below. I post just about every day. I try and post something fun, or at least every few days. I thought the funniest thing this week, we have a coworker leaving, so we got him a couple cards and balloons that we blew up that said, you know, we will miss you for about 5 minutes, and you know, I thought it was really funny. So that is basically all I wanted to cover in today's video. If there's any sort of comments or questions that you have for the stock market, dividends, or real estate that you would like to see in an upcoming video, drop it into the comment section below. I do appreciate all the feedback that you guys have been leaving and asking questions, enjoying the videos. If you did enjoy this video, hit that thumbs up. If you have not yet subscribed to the channel, I would really appreciate it if you do go down below this video, hit that red subscribe button below, hit the notification bell to be notified every time I release new content, which is every single Monday, Wednesday, and Friday. And then of course I have my weekly recaps every Saturday. So that is it for today's video. Thank you all for tuning in. I will see you next time. Have a great day. Bye.